Hi, this is Nick Kaka from BMA, and welcome to today's webinar. Along with my partner, Mike DeLuca, we're here to talk about downtime in accounting, which is really talking about waste in accounting and finance processes. Before we get started, hold on. Before we get started, if you want to get a copy of today's presentation, it's in the handout section of your control panel. Obviously, if you are watching a recording of this webinar and you'd like a copy, just email me and I'll send you one. Secondly, you have any questions, please type them in the question pane and we'll try to get to as many questions as possible. If you are a United States CPA and would like to get 1 hour of continuing education credit, you have to answer the 3 polling questions, remain logged on for 50 minutes, and obviously attend the live event. If you complete all those and you'd like a certificate of completion, you can email that to me and we will send it out to you. So this webinar is based on a book that Mike and I are writing called Practicing Lean Accounting. We are deeply into writing it. Our goal is to have it published and available in early 2021. And so, we talk a lot about waste in accounting processes, and this is part of the book. So before I get started, I wanted Mike to introduce himself to you. He and I have been working closely for most of this year, and some of you may have met him in other events, some of you may not. So Mike, go ahead.
Thanks very much, Nick. Hello, everyone. I'm Mike DeLuca. My background is lean accounting and finance. I was had a finance leadership role in a large healthcare organization, $4 billion a year, United States dollars, and learned lean accounting and finance. Really implemented that in my area of the organization as the company implemented its lean strategy, and so really ran the function as a lean accounting and finance function for over 10 years before I left, and have been doing lean accounting and lean coaching since then. So I'm glad to be here with you all today.
Okay, and Mike and I are going to sort of team up on this. We're going to take turns narrating, but we will also talk whenever we feel like it. So our learning objectives today. By the end of this webinar, you should be able to explain the 3 types of accounting activities, explain the 8 types of process waste that can be present in accounting processes, and identify how to begin improvement activities in accounting. One thing that Mike is very strong about in terms of when he's coaching and teaching is, as long as you just start identifying waste and eliminating it, you're on the path. And that's really what's important to get out of this webinar. Our agenda is we're going to talk about the accounting activities. We're going to break down the acronym downtime in each of the 8 wastes. We're going to give you some points and tips on how to actually begin improving accounting processes. Then we'll have a wrap up and questions. So let's get started. Accounting activities. There are 3 types of activities in accounting, and actually this is broader. If you have any lean training or your company is on a lean transformation, some of this might be familiar with you. But in general, there's 3, you can classify any activity in one of 3 ways. One is value added. So from an accounting viewpoint, these are all of the activities or process steps which impact the company's customers and the value streams in the organization which create the value for the customers. Accounting does have some interaction with your customers. primarily in the billing and invoicing process and all the work that goes around that. Accounting does provide a great deal of support to the order fulfillment value streams in the delivery of relevant and reliable information, a combination of financial and operating measures and numbers that help the value stream manage and control its operations. The second type of activity is non-value added and necessary. So it's non-value added in the eyes of a company's customer, but for whatever reason, it is necessary that this activity occur. It could be based on regulations, company policy, technology, other factors. What's interesting about the accounting function is that a large basket of activities fall under this umbrella. For example, the approval process, any approval process, whether it's like in payables or receivables, that's a necessary activity in a business. It's good controls, but it doesn't add any value. Your customers don't care about your approval process. And so what's important to understand here is that we want to distinguish these three categories of activities. The third category is basically the pure waste. These are any activities that consume resource time, but create no value in the eyes of the customer. It's totally unnecessary. So, in terms of like a framework for improvement, ultimately you want to spend more time on the value-added activities because that's most important. Secondly, these necessary activities you want to really minimize. Perform the activity in the leanest way possible. And then the waste, we want to just get rid of it. So we want to spend more time on value-added activities, less time on the non-value-added but necessary, and we want to spend no time on the waste. That's just the way to think about it. So those are the activities, but where do they exist in accounting processes? So where's the waste? What's interesting about accounting is that the accounting function is made up of many processes. So you have accounts payable, you have accounts receivable, you have payroll, you have month end, forecasting and budgeting, FP&A. You have all these functions which go on inside accounting, and each of these functions is a process. And the waste can be in the process. It can be the process step itself. What is a process step? It just takes some input and it converts that input into some output. And it goes through a series of process steps. And for accounting, this is all information. Accounting processes information. They get sort of raw information and there's some work done to it, it's transformed and you get financial reports, sometimes financial transactions, things like that. So there can be waste there. And then there's also the tasks which make up the process step. These are the specific activities that have to be done to complete the process. And there's lots of these in accounting. Just simply entering an invoice in accounts payable is not necessarily just a one-step process. There might be 5 or 6 activities which go on, some of which relate to the software that you're using. So the idea here is to understand that waste can manifest itself in anything here. It can be the entire process step. It can be one or more of the tasks within the process step. It could be between process steps. It could be at the beginning, the input, the data accounting is receiving is incorrect, or it can be the output. So what's important here is what do you look at? When you're trying to improve accounting, what do you look at? And so you have to look at the process steps, you have to look at the different tasks in the process steps, and then really start thinking, which activity is value added, which are non-value added necessary, which are pure waste. And it's really a shift in thinking in terms of seeing the process. Our accounting processes are invisible. Most of them are done on computers, and it's not like a factory. So we're trying to understand how the work gets done from a lean viewpoint. So that leads us to polling question number 1. So I have to open up the poll, and I have to launch it too. All right, so I've launched the poll. Which of the following is not a category of accounting activities? Value add, non-value added necessary, gap, non-value added waste. All right. I'm watching everybody vote. We got up to about 50% of the votes. Give you a few more seconds. All righty, everybody's just about answered. The correct answer is gap. We talked about value-added activities, non-value-added necessary, non-value-added waste are the 3 types of activities. So let me close the poll. I'll share the results here. And I'm going to hide. And can you see my screen?
Mm-hmm. Yes.
All righty. So let's move on to process waste, and I'm going to turn this over to Mr. DeLuca.
Thank you. Nick's talked about a number of different levels of thinking about a process. We have inputs, we have process steps. Within those process steps, we have granular tasks, and then each process has an output, and that can be anything from a payable to payroll to a receivable. But even think about it in the context of some of the financial planning activities we do. What we want to talk about, and to really illustrate these different types of wastes, is how do we see them? How do we encounter them? And then what Nick will take from there is then what types of things might we do to really address those. So let's start, and like Nick said, there's an acronym that we use to remember the 8 different types of process wastes. It's downtime, because something that we want to avoid in our work is downtime. And the first one is defects. So thinking about defects, and for each one of these, we want to talk about what's the waste, why does it matter, what's the impact, and then what are some examples. Defects, as Nick said, you might be doing a process, you might be doing work, and you get an input that doesn't have the information you need. It's incomplete, it's incorrect, and in some cases you might not even know that it's incorrect until you've worked with it. So anytime that we have missing or incorrect information or incorrect transactions, the defects can actually occur in our own process. So I could get good raw data as an input for a reconciliation, but there might be something faulty in my reconciliation process, and I come up with something that is erroneous or incomplete. And the importance in defects not only is the first letter, because it's handy, and the acronym downtime, but it's one of the most pervasive defects that we see, pervasive wastes that we see in our work. And it's just honestly an important reason, and some of these may seem completely self-evident to all of you who are accounting and finance professionals, but I think we become so used to having to deal with these in our daily work that we've accepted them as part of the process. So an important part of really understanding these wastes is not just the academic perspective of recognizing them, but the actual tangible or tactical aspect of saying, I see that I deal with that waste, or my team deals with that waste every day, and there's something that we can do about it. So obviously defects impacts our work because we might get stuck. Oh, that's wrong. I need to stop and fix it. Now I need to wait for someone maybe to get me some better information or complete information, or I need to redo the work myself. So there's a significant impact on our work. And in some cases, like I said, if we don't notice the erroneous information as it comes in, we could pass that on downstream. Could result in an incorrect payment, an incorrect posting of a payment to a vendor, incorrect posting of cash to a customer account, any number of things. Can also be, we think about a lot of the management accounting or the consultative work that we do in our finance and accounting teams. We could be providing information to decision makers that is misunderstood or acted on without correctly understanding the information. So we've got some examples here. We just talked about payables, receivables. Anytime you're doing a correcting journal entry, think of, well, why am I doing that? Why should I have to correct anything? And like I said, the misinterpretation of information. So defects, pervasive. Next one is overproduction, doing more than we need to for the end user, or doing it sooner. So producing more or more quickly, basically overproducing relative to the next person or the end user's customer requirements. And so the end user could be an internal management team that's consuming the information. It could be overproduction relative to a transactional process, but really the impact here is primarily that it takes time, right? It takes our time, and it takes the time of the person potentially receiving the information to sort through what we produce versus what they actually need. You know, an example might be, we produce a packet of information for an auditor to review, a management team to review. Maybe there are dozens of pages of indicators and data, and they need a subset of that. It doesn't only take extra time for us to produce that, but the recipient then has to sort through all of that in order to get at what they want. So it consumes resource time for everyone involved. And so examples here are information reports, like I just said, and more documentation potentially that's needed by auditors. Next one is waiting waste. And again, you know, many of these we just get so used to. Oh, I'm waiting for the customer to get me that correction on their on the account that they're making that payment on, because they got a payment with no account information, or I'm waiting for something from the vendor so that I can pay them. They send an invoice without an invoice number. I don't have a W-9, whatever it might be. So anytime that I'm waiting for something, and again, we get so used to this, I'm waiting for the system to reconcile at midnight so I can download the most current data, right? Because it's not updated real time, or maybe it's only once a week. Any number of things that we could be waiting for. And like Nick said, it can be inputs, it can be in a process step, or it can be handoffs between process steps where we experience these wastes. So waiting time interrupts the flow of a process, and can result in overburdening from the perspective. And what we mean by overburdening is, now I have a number of, I'm waiting, right? So I might have time to actually work on something, but can't because I'm lacking the information that I need. Now a bolus of information comes all at once, and now my work is, now all of a sudden I've got a lot that I could work on, but not enough time. So how many times do you have a deadline and you're waiting and waiting and waiting, and now you're up against the wire? And so that's an overburden for me to either meet the deadline for month-end close or any number of things. So again, we have lots of examples. Go ahead, Nick.
Yeah, I just wanted to add on the approvals. A company that Mike and I have both done some work for, they have a very complex reporting process for a variety of reasons. But one of their problems is that it takes them on average about 20 days to get invoices approved, which is totally unacceptable, and it has impacts on cash flow and things like that. Plus, the suppliers are not happy about getting paid late. But it's just interesting how this waiting time sort of manifests itself, and like you said, Mike, it's accepted.
Mm-hmm. we look at that process and we say, well, it couldn't be better. This is the way, we're in some ways we might feel like we're stuck with it. This neglect waste is an important one from the perspective of accounting and finance, and really any kind of what I would call the knowledge function. And it's true in all types of roles, but in our knowledge work in accounting, the fact that we and our staff, our employees, our team members have in most cases extensive training and education, and we may not be making the best use of that. So I had 30 folks on my team, all of whom had at least an undergraduate business degree, and many of whom were doing repetitive rote transactional work, which wasn't necessarily the best use of their skills and capabilities or their time. So when we fail to really utilize the skills of employees, we're neglecting those capabilities, and that results in a number of things. The impact is like it says here on the slide, not matching work to skills, poor morale. But think about the turnover that this impacts. If someone feels like, well, I'm not valued here, my skills aren't being made use of, the cost of turnover in an organization is often hidden, but significant at the same time. And the fact that we could be better serving our organization. So think about the categories of activities that Nick mentioned, the value added, where our teams actually touch the end customer and inform part of their experience of transacting with our companies, as well as the non-value added but necessary. We need to do those things so that our business is running smoothly and effectively. So if we're not making the highest and best use of skills and capabilities on our teams, we're missing the opportunity to really help our company both delight the end customer, as well as really function effectively from a financial controls, financial planning, financial performance perspective. Sometimes this neglect waste is hand in hand with the fact that we have systems that we're underutilizing. So we find that our team members, our staff, are doing manual work because we're not taking advantage sometimes of system capabilities that could take that on for us. So
yeah, one example, I did some work at a local company, and it was primarily more lean work than lean accounting. And the controller of the company, it was a small company, but the controller was doing payroll. Now, there was only another person in the accounting department, so obviously it didn't make sense for the clerk to do payroll because it wouldn't have been a separation of duties. But the controller, like you said, Mike, educated, experienced, and every 2 weeks had to go through that payroll process, and it really frustrated the controller. And in talking with the owner and the controller, what we ended up doing was outsourcing payroll, because it was all salary, it wasn't hourly, so we didn't have to be concerned about overtime. And then there was, it was really just primarily the, putting in the 80 hours so they get paid. And then it was the benefit management, changing the benefits, which was a problem. And so, it was just outsourced to a local payroll company, and, it freed up a tremendous amount of time, and it allowed the controller to spend more time analyzing rather than processing transactions.
Exactly. So we have two types of waste that we'll talk about separately. One is transportation, and then in a couple of slides we'll get to motion. But keep in mind that transportation is moving something else unnecessarily, and motion is moving yourself unnecessarily. And so typically in our work in accounting and finance, we experience transportation waste and the unnecessary movement of information. And it matters because every time we're moving things around, there's a result of a defect. Think about the number of times you've downloaded information or data from one system in order to upload it into another system, but those systems don't have, the dimensions aren't defined in exactly the same way. And so then you do a reconciliation, you might miss things. So there's a lot of waste associated with that, but defects can occur. It's extra time, there can be wait time, and the work can build up. So Anytime we're moving information around within or from one system to another, moving files around from a shared file folder to SharePoint, back to a shared file folder, downloading from your company's shared file system to work on locally, and then re-uploading any movement of information. And this includes the information that you move around for approvals, reviews, and checking as well. So that's transportation waste, and we find it actually. I'm working with a company now, and for their payables process, they had a check review process that actually was still dependent on the manual movement of check requests paperwork through their interoffice system. And since their courier only ran 2 days a week, and they have 20 different sites, in order to get from the main administrative building to the building where the check request needed to be created and approved, and then back to the executive team, it could be easily a month before it even made it around to the different sites. And again, like Nick's example from before, then you're paying vendors potentially late. So that's transportation waste.
Yeah, I think one of the keys here is to recognize, we're defining transportation waste as unnecessary movement. So that means there's probably some level of necessary movement. But really, I think that the key here is to create awareness that that these handoffs, this movement of information, is it really necessary or not? Can it be done in a way to prevent quality problems from occurring? And just recognize it. Again, it's like some of the other wastes Mike's been talking about. It becomes a natural part of our daily responsibilities or work when it can be viewed as waste, and there could be opportunities.
Exactly. We want to see these things and question them, and then really look at, back to Nick's earlier slide, how is the process creating this waste? It's not an individual that's at fault, but really the process that we've gotten used to. Inventory waste, and it's easy to see inventory waste in the manufacturing environment, but in the knowledge environment, inventory shows up as work or information that batches, that collects before we deal with it. We wait until the end of the month to process certain transactions. We actually do our financial planning processes typically once a year. That's a large batch of planning information. And we do a number of things, whether they're billing, receivables, payroll is twice a month or every other week. We do things in batches, and some of them make sense. Some of them are required, and some of them it's helpful to question. I was working with a healthcare company that was doing billing for healthcare services, and based on the type of service, there was you couldn't bill. These were patients that were undergoing care for lengthy periods of time. And you couldn't just bill every single day for that day's worth of care. That you can only bill on, in a certain frequency. But they had created that into a once a month batch at the very beginning of the month. And the reality is, even though they couldn't bill in many cases more frequently, they didn't need to just batch it and do it once a month. There were ways to spread that out over the month that made it a lot easier for the billing team to keep on top of their work. And still stay in compliance with regulatory requirements. So we think we're stuck with many of our batches, and in a lot of cases, there are different ways to think about the work so that we can reduce, and Nick's got the example impact here of that unevenness of these having to do things once a month is really challenging for our teams. And can create, can result in backlogs, in waiting time for others, and so it's important for us to see that as well.
Yeah, and again, it's it's about awareness of this. Especially like month end. Every company does month end. If you have any accounting experience at all in a business, you understand month end, and it can be quite hectic. And there's sort of like this traditional approach that we have to do things at month end to reconcile and balance. But there's other, we're going to look at 30 days of transactions to understand why the numbers are what they are. And again, it's, the idea of reducing the batch size, and which is an essential practice in lean, is that when you reduce the batch size, the work flows faster, whether it's through manufacturing or it's going to be true in payables, receivables, and month end. So the idea here is, focus on reducing, I understand where the batches are and focus on reducing them over time.
Absolutely. Motion waste, like I said before, transportation is moving other things, motion is moving yourself. And when Nick was talking about the different levels of processes, we have processes and then individual steps. Sometimes if we look at a process, the motion waste isn't easy to see. It's not easy to see until you start looking at the step-by-step detail of the process. So when we look at our processes, it's important to understand what level of understanding or insight do we need into the wastes. Motion will show up. So here's an example. I'm posting customer payments to customer accounts, and I'll get information around payments that have been received either through a bank statement or a lockbox or some kind of a download. There'll be information that I get, and so that's a process step, right? To do that, and then the next process step might be apply to customer account. So at the process step level, it seems pretty straightforward. When we actually sit and watch the people who are doing the work do the work, we can actually see a lot of the motion waste that's involved, a lot of the, how many screens do I have to go through to find what I need? How much searching am I doing in order to find the information that I need? I'm trying to post this payment to a customer account, but they have 12 invoices open, or 12 different things that I might be posting this payment. How do I know which one it is? So a lot of this motion waste we can see only when we get to the detailed level. How many keystrokes, how many screens am I clicking through? How many times am I inputting the same information on multiple screens because the system makes me do it, right? And the impact of this is not just my time wasted, but again, the neglect of my skills and capabilities, and especially if it results in manual work, the potential for defects and rework.
Yeah, okay.
And then extra processing waste, similarly, sometimes we, I'm sorry, I'm hearing an echo. So extra processing waste, sometimes we need to look again at that detailed level of a process. These are all of the extra steps that we go through behind the scenes that again, we often take for granted, that in order to get the customer what they need, we're doing extra, we're producing extra activity in order to deliver what we need to deliver. And it's simply not a good use of time. So think about the important approvals that you have in your control processes. If you actually evaluate those in terms of which of those approval steps are robust and meaningful versus which of those approval steps are potentially not adding to your effective controls, those can be excess processing. So there are any number of different examples of this. We've got some others on the screen, and Nick, you wanted to add something?
Well, yeah, I was going to say, you were talking about approvals, and that that company that we did the work with on accounts payable, and I mentioned it took like 20 days to approve an invoice. One of the issues there is many invoices required 4 approvals. Now, that may seem excessive, but these approvals, the 4 approvals were created because the senior leaders of the company, they had a lack of trust in the process, so they added more approvals, and it created time. Again, this is an example of not solving the actual problem, but it's just there's just a lot of work that really just isn't necessary, and you can just stop it.
And I think this is really important in our work in accounting, because we are very appropriately focused on are we compliant, or do we have appropriate controls in place that are robust? Do we have correct information that is being both reported to internal leaders as well as external parties? These are all critical elements of what is not necessarily value added from the end customer's perspective, but necessary for the business to thrive. And what happens oftentimes is we will add excess processing to our work in order to ensure that we have quality information, we have good controls. Sometimes we don't recognize that the extra processing steps that we've put in place aren't actually helping us meet the intent of what we set out to do. And so approvals may not be robust or meaningful. We already talked about that. Another example is when we put in reconciliation or checking or verification steps to catch errors because we haven't really understood that very first waste, which is the defect. And so as we transition to this next section and talk about different ways to think about improving, we have to think about why are we having these wastes to begin with? And then rather than adding steps in order to address the issues, whether it's a concern about lack of control or the need to reconcile and check for errors, what's the source of that to begin with? And how do we complete the work? Like Nick said, it's non-value added but necessary. We want to minimize it, not because we don't want to do an excellent job, but because we want to do it in the most effective but streamlined fashion.
All right, let me open up polling question number 2. I'll launch the poll. So which of the following is not a type of accounting process waste? Defects, too many accounting employees, excess processing, or overprocessing? I'll give you about 10 more seconds and then we'll continue on. All righty, close the poll. Let me share the results. The correct answer is too many accounting employees. So I'm going to hide the results. Let me do all this. And you're back to seeing my screen. I just want to double check. So I'm going to talk a little bit. Mike and I are going to talk both about improving accounting. You know, one of the key points is that, you know, there's not like one standard way to improve accounting, like do this, do this, do this, and do this. It really is best to look at your accounting function as it is performing. And here's a way to think about, you know, what do we work on in terms of improvement, what's important, what's not. And if you look at it from a customer perspective, your company's customers, there's value added work and activities, then there's non-value added. From the business viewpoint, accounting can be looked at, accounting is a necessary activity, but there are also unnecessary activities. So when it comes to focusing on your dealing with your company's customers in terms of billing and invoicing and maybe how you support the value streams, you know, you want to focus really there on this idea of continuous improvement. We are always going to try to get better at serving our customers because we create value. The non-value added necessary, which really is the work that accounting does. Think of it like that. You know, how can you put in daily plan, do, check, act? How can we solve problems? We talked about defects. You know, how can we identify defects each day and work to resolve them? Also learn in terms of defects what the trends are so that we can apply continuous improvement or process improvement to eliminate those defects. And so, you know, you want to focus your improvement activities specifically in accounting. And then there's just the unnecessary, you know, how can you just stop and eliminate whatever is going on? And there's simple things. I mean, if the waste is apparent and visible, just stop doing it. If the waste is a little more complex in terms of how to solve the problem, well, that's where you just go through the continuous improvement cycle and come up with different types of solutions and see which one works the best. I want to talk a little bit about month end, and then we're gonna look at some other accounting activities. If you look at month end in terms of downtime, okay, so sometimes you're dealing with defects during the month end close period. So if you're dealing with defects, and defects are typically the result of transactional errors, the effort needs to be made to how do we resolve the transactional errors much faster during the month rather than looking at them at month end. Overproduction. Mike mentioned something about this in terms of the other analysis and reports that are produced in addition to the financial statements. There's a lot of opportunity there to possibly eliminate that. One example I had was way back when I was in my before I became CFO, I was controller of a company, and the CFO was an older gentleman who was on the retirement path, and he was a big believer in these three ring binders that get distributed to senior leaders every month that had financial statements and graphs galore and all this, and they never looked at it. All they wanted to see were the financial statements. But again, it was not thinking but it took time before month end close, because you just didn't send the financial statements out, you had to send the whole notebook out. Waiting time, and make the month end close process visual, because you might be waiting on information, and if you make it visual, and if you're managing schedule attainment on a frequent basis, then you'll start understanding the root causes of waiting time during the month end cycle. Month end is a burden on accounting and finance employees. Companies typically set, a close date, and you work as hard and as long as you have to meet that deadline. And as Mike often says on different coaching sessions, you hope that the month end is like on a Monday or a Tuesday. That way you get the weekend to work and it doesn't count against the close. So again, try to reduce the burden of the month end work. There's some transportation activities which go on in terms of the movement of information. Try to identify those and maybe reduce the amount of time spent on that at month end. Month end is a batch process. The question is, is there work that goes on only during month end but covers the scope of the entire month? If that is the case, then there's an opportunity to move that work into the month. For example, maybe you do a weekly reconciliation, then at the end of the month, you do the final weekly reconciliation. A lot of motion, searching for information can take up time, and extra processing. Look at every accrual that you do. Look at your journal entries, especially recurring approvals. If you're recurring accruals, not approvals. If you're accruing and reversing the same numbers each month, there's opportunity there. All right, Mike, you can take this part.
I will. We have to go back to that last slide though, and just emphasize one thing that you mentioned, because when this happens, not just in month end close, but in a lot of our work in accounting and finance, this idea of unnecessary precision. And so when we're talking about precision, right, and like I said, I was in a $4 billion company, but we had a level of precision originally, really before we brought lean thinking in, that was whether it was an estimating accrual, or in particular, it came up in our forecasting process where we felt like we needed a level of detail and precision that ultimately didn't improve the output for the end user, whether that was the, the analysis of month end, or the veracity of our monthly financial statements, or the usability of our forecast. So think about the level of precision and contrast that with level of precision, the fourth decimal place, right, or to the dollar, or even to the tens or hundreds in a multi-billion-dollar organization, versus accuracy, right? So Nick used the phrase before, reliable information, right? I want to be able to rely on it. If it's if it's an estimation or a forecast and it's to the nearest X thousands of dollars, I can still rely on that to run the business potentially. I don't need it to the nth level of detail. So always think about precision as well in our work, because that causes a lot of extra processing. Thanks for letting me go back. Just wanted to make sure we touched on that.
Yeah. And another example of unnecessary precision is this idea of holding accounts payable open for X number of days in the new month to make sure you can accrue invoices for the previous month. Now, I understand, I'm not saying we get away from accrual accounting, but the real question there is, are those invoices, holding accounts payable open to be very precise, is it material or not? That's really the key. And, you could close accounts payable the day before the month end, or maybe on month end. And then if an invoice comes in that happens to be material to the reporting of the previous month, you can always do the journal entry. You don't have to hold accounts payable open for immaterial charges.
Mm-hmm. Yeah, exactly. So let's talk a little bit more about improving accounting activities, and think about a number of different levels of approval. And so go ahead and yeah, perfect. So as we think about our work, and we often think about our work in terms of a process. We go to payroll process, payables, receivables, financial planning, treasury, cash flow management, whatever that might be. Think about activities that are common among different processes, and then some of the things that we can do in order to better understand first what's going on and why, and then actions we can take. So we've talked a lot about accruals, reviews, checking or inspection steps. Go and see them. Talk to the folks who do them. Talk to the folks who are providing inputs. Like I said, the organization that I'm working with, that was looking at their payables process and check requests, they actually talked to all the managers who were doing approvals and said, just please be honest, because we're evaluating our control processes. Do you actually review input detail when you get this, or do you trust that the manager or the person who submitted it to you has already done that review, and basically, for lack of a better phrase, you're rubber stamping it? And a significant proportion of folks were just saying, I approve because I trust the person who submitted it to me. So really go see what's happening, and then stop unnecessary steps. Ensure that you actually have robust controls where you need them, and that might mean you need to do a little bit of process redesign. Look at your transaction limits and things like that. So that's important with reviews and approvals and checking. Reports. This was a big one for us. I had 30 folks who reported up on my team, and we produced, before we started our lean accounting journey, over 400 recurring reports a month. And what we did was and this may be some of your experience, but we said, we would often say, hey, do you still want this report? And people would always say, oh yeah, I love that report. I got to keep getting that report. You can't stop producing that report. And it's probably used about 40% of our resource in the team to produce these reports. And then when we brought the lean thinking in, and the company really undertook a lean strategy, and we got back to Nick's grid and said, how much of what we're doing in finance accounting is really allowing you to improve value for the end customer? And we said, how many of these reports actually help you make decisions that benefit the end customer and help improve value? And it was a collaborative discussion. We got from 400 reports down to 116 and freed up a ton of capacity, reduced overproduction, and made better use of the folks on the accounting and finance team. So that's an example. Accruals we've talked about in the context of month-end close. Why are we doing them? So think about for many of these, what's the cause of the accrual? Why are we doing it? And then do we need to? So what's the purpose? And then based on the purpose, can we eliminate them? Can we auto accrue and maybe do an annual true up? What's the materiality? So all good things to basically understand and then consider to improve. Journal entries, similar conversation. Why are we doing them? What's the purpose? What are some of the causes? Anytime we're doing correcting entries, what caused the error in the first place? If this is chronic, can we understand what the source better and eliminate the possibility for the entry to begin with? And then we understand why are we doing the adjusting journal entries and reduce those as well. Oh goodness, time tracking. This is the big one. We could probably do a webinar just on the accounting needs for tracking time relative to projects or to customer accounts and this is true whether it's manufacturing. I've seen it in construction. I've seen it in software. Why do we do this? Again, go see, but also understand the requirements of the end user. Who is saying that we need to track this time? I'm not saying it's not important. I'm saying it's important for us to understand as accounting professionals and leaders, why are we doing this? How does this benefit the organization from a compliance perspective and from an understanding of our own financial performance? And then minimize anything that's unnecessary.
Yeah, I'm talking with a company, just a casual conversation. It's the operational vice president who he contacted me and he just wanted to get my opinion on time tracking because the operational people actually don't like it. It's very detailed. It's very burdensome for them. But accounting
it can result in a lot of errors that need to be corrected.
Accounting wants it, but accounting can't give operations a good reason why they want it. That's the thing. They just, well, we need it. It's yeah, and I agree with you, Mike. I even worked at a company. Again, it was a local company that they did a lot of time tracking on time cards, and it was about 20 years ago. And the time tracking on cards was terrible. So what was the solution? They put in, badges and scanners. And do you think that the time tracking got better because it was badges and scanners, not time cards? The answer was no. Why? People forgot to scan in and scan out. So,
and the moral of the story is don't automate waste.
Yeah, that's true. But really, if you're in accounting and finance, and there is time tracking in your business, really take a close look at it because a lot of it is not necessary.
Same thing for material tracking. We can go through a number of these things, and I think we should go. Exactly, yeah, because we talked about a number of these already in other examples. Allocations, any kind of allocation, standard costs, allocation systems, and in each one of these, and when I've already talked about forecasting analysis, understand what's going on now and what the end user requirements really are. Really be thoughtful in questioning, why are we doing these? What requirement does it meet? And then if we're really clear on the requirement, how do we meet it in the easiest, most effective, high quality fashion? Sometimes the requirement is something we've imposed on ourselves and it's actually not necessary.
Yeah, and so, there's a few more activities that we could talk about. We don't have enough time, but the whole point here is, these are common activities which go on in accounting processes. Take a look at them and study them to see what are some opportunities to improve these activities. So let me do polling question number 3 real fast. And go and see. Go and see means to take a vacation, observe the waste, or go to the movies. Oh, you were all very quick on that one. Good. And sharing the results. Yes, it is about go and see. So that'll take care of the polls. And now we can get into the wrap up and questions. So, in terms of looking at different types of improvement methodologies, and let me just put these up here. There's this whole basket of non-value added unnecessary activities. If you discover them, if you become aware of them, just stop and eliminate them quickly. You have to do a little bit of a study, but to determine if it truly is unnecessary, what you end up doing is creating capacity and more time in accounting. There's sort of the daily PDCA or daily management practices. And this is all about, how do we create a standard response to problems as they occur daily? Because the issue is, that stuff happens. Defects will occur. It's how you respond to the defects. How do you manage the demand and the flow? How do you balance the capacity with the demand? And how can you eliminate waste inside accounting processes? Then there's continuous improvement or process improvement. This is more of the proactive planned approach, where you have a certain future state goal. For example, we want to reduce the lead time in accounts payable from X to Y in terms of the number of hours or days. And you really have to study the process. You may have to map it. You may have to get others involved cross-functionally in terms of redesigning the process. And then finally, there's the radical transformational improvement, where you really, think way outside the box on how to just totally change the process, maybe automate it.
Right.
So those are the typical improvement methods. Mike, did you want to add anything?
I would just say transformation, all of that is really important. There are opportunities every day to improve. Some of it is within our control. Some of it requires cross-functional collaboration and awareness. And this idea of transformational improvement, in addition to automation, there are things, and that I actually went on a lean visit of an electronics company that had moved from monthly paying their suppliers on a monthly basis, and then ordering, to basically real-time vendor managed replenishment, where every time an input part was used, it was scanned and the transaction was automatic and immediate. So it eliminated the batches, it eliminated any manual work. But what the company got out of it was they got preferred pricing, because the vendor knew that they were going to get instantaneous payment. So there's just a lot of different levels of transformational improvement in finance and accounting that I would just, we don't, obviously it's hard to start there, but just, it's also exciting to think about that level of improvement for our organizations.
Yeah, so here's something you can do. I called it an assignment, but it's just something you can do on your own, work with people, but in your accounting function. But look at accounts payable. Every company does some form of accounts payable, so it's pretty easy. And actually, the process is pretty standard across companies. But try to take a deep dive and look at it and try to identify the waste and maybe try to quantify it. Okay, and here's what you can look for. I'm just going to put all this up and not talk about it in much detail, but I did this with a group of companies in Australia recently, and it's sort of like a fun exercise, just to teach yourself, teach your accounting team about waste, and look at something that everybody's familiar with, and understand defects and overproduction and weighting. So that's something you can do, and if you do it and you want to talk to us about it, we'll be glad to hop on a Zoom chat and you can share your results. And if you have any questions, we'll be glad to give you our advice on some things. All right, final reminders. You're gonna you have a survey to complete, or we'd like you to complete a survey, 5 simple questions. It's gonna pop up as soon as I end the webinar. Please complete it. It helps us improve the webinar experience. Again, for CPE credit, send me an email and I'll send you the certificate. Wanted to let you know that we have a new online workshop coming up in November. It's going to be 4 hours, two hours on November 17th and 2 hours on December 1st. It's called the Lean Profit Model. You can go to these links and find out about it. Mike's going to be running this event. It's good. You want to describe it in a minute, Mike?
We're kind of short of a minute, but it answers that question. We're doing lean. Where do I see it in the financials?
Yeah, and it's a fun workshop, and encourage any individual that works in a company on the lean journey. I mean, if you can get a team of people together, it's a fun activity to go in and look at your business and determine, what is really the financial impact of this lean strategy. And again, if learning opportunities, there's our contact information. If you haven't joined the BMA mailing list, you can. We have the Lean Accounting Community Chat, which some of you on the webinar attend on a fairly regular basis. If you'd like to join, there's the link. We do it twice a month. The next one is coming up a week from today. And we also have a Lean Accounting community on Slack. Contact Mike or myself for information to join. We'll send you the link. It's a private community, and it's just a way for people to have a source of reference of other people that are lean accounting practitioners or just interested in lean accounting. So let me see if there's any questions real fast. There's actually one, and the question from Margie is, aren't there some activities that the company considers necessary but are actually waste? My answer is yes. Mike, your answer?
Same answer, absolutely.
Yeah, and if you think about accounting policies and procedures or internal controls, and I'm not saying you throw out all your internal controls, but that's a source. Policies, procedures, and controls that companies create, can be non-value added waste or non-value added necessary. All right, so that wraps things up. We're a couple minutes past the hour. Thanks for attending the webinar. If you have any questions, please contact us and stay tuned. We'll have another webinar in November, another in December. We'll be announcing those shortly. So have a good day.
Thanks,
and
everyone.
see you soon. Bye.
Yeah.